Hello, good afternoon. You're watching Closing Trades 180 now. I'm Anisha Jain with me, Aisha Faridi. And for now, the market is showing good momentum. We are above the mark of 22,500 for the Nifty. But there's a bigger recovery when you look at the Bank Index. That's up almost 400 points from the lows of the day. There's a good amount of traction on that one, 250 points higher thereabout for the Bank Nifty. Of course, the bulk of that is attributed to HDFC Bank because that's actually managed to perk up. Kotak Mahindra Bank too in the last few minutes has managed to see a bit of a jump, and then you have other names the likes of EU Small Finance Bank, Federal Bank, PNB, all are doing well for themselves. On the losing side, however, watching out Bajaj Finance, the update wasn't too bad, but it's just some amount of profit booking happened on that one. BPCL, Grasim, Bajaj Auto, these are some of the other names from the frontline index. From the broader markets, need to watch out for all of these Q4 updates. So the likes of Awas financiers are in focus on account of that. We also have the real estate pack continuing its momentum. So Mahindra Lifespace, Lodha, other names as well from the sector like DB Realty, etc. doing quite well. IIFL Finance, that one is a bit of a strange case. The stock is up 13%. Of course, it's nowhere close to those highs that we had seen pre the issue had propped up, because at one point of time the stock was above 600. Still, IIFL Finance for the day has managed to perk up 13%, and that stock will come up for you shortly. IIFL Finance is the stock that I'm talking about. On the losing side, Birlasoft is down, Aisha, in the trading session. You also have JK Cement coming down, but then some of these, city gas distribution companies are also in focus. So small pockets at work.
Yeah, small pockets at work over there. Of course, a lot of Q4 updates have come in. That's really fueling the market mood as well. We've already seen HDFC Bank, which has already contributed a good 40 points to the Nifty move today alone. That said, a lot of other stocks as well which are buzzing in trades. So let's quickly bring some of them up for you. Look at SBI Card. What a breakaway move really on that stock. Almost a 5% surge is what it's seeing. Also, some of these underperformers like a Marico, for instance, that stock is holding up 4% as we speak right now. So good going there. IGL, Anisha was just talking about the gas stocks, almost a 4% there coming in there as well. And Indus Tower, which has only gone from strength to strength, that pushes up another over 3% in the futures alone. Of course, the market has its share of losers as well, and the laggards, L&T, Bajaj Finance. You've got most of the technology names, the metal counters like a Hindalco, etc. as well, which are on the sidelines, and not really much participation coming in from the likes of an ICICI Bank, IndusInd Bank, or for that matter, even Reliance, which is currently looking a little bit soft. But that said, since we're on the subject of the city gas distribution companies, here's an now exclusive. We're learning from our reliable sources that the government is relooking at the policy of granting exclusive rights to city gas distribution companies. Let me take it across to my colleague Prakash Priyadarshi and find out what he's picking up from his sources.
Yes, an important development coming in as we are learning from our sources that the government is working on a comprehensive policy when it comes to providing exclusive marketing rights to the city gas distribution companies over its geographical areas. Oil Ministry has just started working on this proposal. In fact, discussion has already been initiated. We are given to understand that the Oil Ministry is of the view that there should be proper guidelines in place when it comes to providing exclusive marketing rights to the city gas distribution companies in order to bring more competition in the sector. We are also given to understand that the Oil Ministry is in favor of revising existing PNG-RB Act, but it is not in favor of providing an extension to the city gas distribution companies for all its older geographical areas when it comes to exclusive marketing rights. In fact, Oil Ministry wants extension should be given based on a rationale, based on a logic. It should not left with open-ended. Therefore, Oil Ministry is not in favor of providing extension to all the older geographical areas belong to city gas distribution companies. Therefore, necessary amendments will be made in existing PNG-RB Act. The process has already been initiated, but the changes will be implemented only after new government sworn in. However, city gas distribution companies have approached a court on this matter, but sources are informing that the Ministry will present its same view before the court going forward.
Okay, so that's the latest coming in for city gas distribution companies. Maybe more competition in the sector is what the government wants, so they want to look at the exclusive rights setup that we had earlier. But let's bring on board our technical experts as well, Kunal as well as Naresh. Naresh, what do you make of the city gas distribution companies companies. They were moving on good amount of volumes, but then there has been a bit of a cool off by the end of the day now.
So the volatility in these names has gone over the board. If you look at the number of gap downs we've seen of late. So the classic one has been Indraprasth Gas. Whenever it has tried to make a comeback sharply towards the 460 to 500 mark, it has seen a correction. There have been multiple gap downs. So even after today's move, it did not sustain well above the 460-70 mark. So I would wait it out. Same way, Mahanagar Gas had seen a gap down from 1500 and then corrected to 1200 very quickly. So in such a case where there are such sharp gap ups and gap downs, it would be a better time to avoid and wait it out.
Coming in on some of these city gas distribution names, but Kunal, what about some of these big buzzers, the likes of Marico, which is reacting to the news flow that they came out with the Q4 update. They're talking about how the margin expansion is going to be quite solid going forward. And SBI Card and ICICI Lombard, as Aisha was pointing out, quite a bit of breakout in the last few minutes.
Yeah, so I think SBI Cards, Marico, these are the two names which have actually come back into a resurrective mode because, these stocks are struggling, have been struggling over the last many months. Both of these stocks are critically below their long-term averages. So, Marico specifically, the stock, formed a bottom, I think, a couple of weeks back and then went to a time-wise consolidation. SBI Cards has been going through a very sharp correction over the last few months. And I think it seems like the stock would probably have found a major bottom for itself. But I think ICICI Lombard something interesting, the stock bouncing off yet again from its 50-day moving average. So a mild retracement is what we've seen for the stock in the last 2-3 weeks. Then again, this could probably be a restart or a reset towards the trend for ICICI Lombard. So that's the one which looking attractive out of the three names.
Okay, point taken. So ICICI Lombard is the other one to watch out for. But just quickly marking a few more buzzers before we take a short breather on the show. So Birlasoft is coming under pressure. You also had some of the names like Eiffel Finance, as I pointed out, Aavas Financiers was doing quite well. So some of these stocks, as I've mentioned. But real estate pack as a whole, Naresh, has been, gaining ground. We have seen Mahindra Lifespace come back. Godrej Properties, there's just a news flow with respect to how they've sold out one of their properties as well. Within the real estate pack, what looks strongest?
So the topic remains Mahindra Lifespaces. Finally, the stock has hit a new all-time high today. So technically, that's a strong structure and it has gone through a period of 1.5 year consolidation. Next, I would be watching out for Godrej Properties because the stock has finally come back to those levels of 2,500, which is where it topped out in 2021. And very recently, also just a month back, the stock had come to 2,500, 2,530 and connected back to 2,150. So it looks like a classical cup and handle formation, watching out for 2,550 to sustain. So that could be a fresh momentum into Godrej Properties. So for now, two good stocks wherein fresh multi-year highs are being made as Mahindra Life and Godrej Properties.
Right. Okay. That's the take coming in on some of those buzzers in trade. It continues to be a very select market though. So while HDFC Bank continues its uptake, there's SBI Cards like we pointed out, there's Marico, there's ITC by the way, which is one of the top performers in the index. It's a solid 2% move that you're seeing on ITC. Kotak Bank is holding out strong. And then, of course, there's Bajaj Finserv, which is also looking good. M&M iShares is well managing to hold on to the grain. But lots more to discuss. For now, we're going to take a very quick break. Come right back. We'll have Mark Matthews join in the studios. Back with Closing Trades right here on ET Now. And guess who's in the studios this time around? We've got Mark Matthews, Head of Investment Research at Julius Baer, right here with us. Mark, welcome to Bombay.
It's so nice to be with you.
Great. So after how long have you come to India this time? And what's been the staggering change that you've felt?
It's been around 2 years since I was last here. And so it's great to be back. And if I have one takeaway, I sense a major improvement in the attitude of people in general, but particularly young people. There's something, a buzz. There's an entrepreneurship which was there before, but I just feel it's accelerated, and it's very heartwarming to see because in many other parts of the world, after this big wave of inflation, young people are finding it really hard to get by. And here in India, I'm sure that's the case as well with many people, but I do sense an energy, a willingness to try new things, and it's very refreshing because you don't see that in many other parts of the world.
And that's being felt by the stock markets too, the energy?
Yes, it has.
Yeah.
It has indeed. Yes.
But do you expect that to continue? Because yes, the youth is motivated and right now the economy is firing on all cylinders. But there's always that argument also made that Indian markets are expensive now when you compare it with the average, when you compare it with the rest of the world. What's your take on that?
My take is that markets don't go up in a straight line, so they could easily retrace, as the small and mid caps have done recently. But what's behind it, first and foremost, is a capex cycle, and in India those don't just last 2 or 3 years. They last on average
Decades.
sort of around 8 to 10 years. So we're just starting that. We're about 2 to 3 years into it, and if that's there, then there's earnings growth in front of us, and that will bring down valuations. And so simple answer to your question, I think it's still going up.
But Mark, you're also at the vantage point that you look at different asset classes and a different market. Tell me, which is the best performing asset class that you think will do quite well in the next 12 to 18 months? Because this year we've started with gold, of course, sitting record high levels, touching record high levels. Crude has started inching up. The US markets were, of course, they've come off a bit. What do you think is going to be?
Made a
yes,
comeback.
70,000 on Bitcoin as well back. So what do you think could be the big outperformer this year if you have to think it at the asset class level or a big portfolio level?
China. So it's not a good market to invest for the long term. And if you put $100 into India 30 years ago, it would be about $1,800 today, which is remarkable considering what the rupee's done over that period of time. $100 in China would be about $150 today. So it's been a destroyer of capital. I'll just say that again because it's such an incredible statistic. $100 invested in China in 1993, 94 would be $150 today. It's terrible. However, there are opportunities that come along in every market, including China, and I think this is one. And I'd say, firstly, their economy is bottoming out. It's become patently obvious in the data series that the gradient is turning positive, even if many of the data series are still showing negative numbers sequentially. They're becoming less negative. So eventually we're going to hit positive. And the markets always move before that happens. In fact, that brings me to my second point, which is that there has been a technical breakout in the Chinese stock market. It was in a downward trend since last summer, and it's broken that. And the third thing is it's not only cheap, it's abnormally cheap. And I could give you so many data points on that. But the one I'll just leave you with is that the Hong Kong landlords, so if you go to Hong Kong, you see all those big buildings in Victoria Harbour. They own those. They're trading at a 60% discount to their net asset value, which is 2 standard deviations below the long-term average going back to 1988. And I've only seen 2 standard deviations below the long-term average 3 times in my career, which were Greece in 2012, global financial crisis 2008, and Asian crisis 1998. Statistically, you only see that about 2% of the time. So I think China will be about 20 to 30% higher between now and let's say 12 months from now. But beyond that, I would not hold it because of the reasons why it is not a good performer, which is essentially the nature of the economy.
So are India and China equal weight in your portfolio, or is there a higher allocation to China?
No, we have a much higher allocation to India because I'm just talking about a trade. But at India for the long term is vastly superior over, I would say, any emerging market. Yeah.
And what sectors then are the ones that you are increasing your weight into?
Well, I would say the infrastructure space is a beneficiary of this capex cycle, and the banks have been big laggards and have derated and now are value. So those would be 2 pockets that we think are worth into now.
What do you make about this disconnect that there is within large caps and small and mid caps? I don't know how familiar you are with Indian small and mid caps, because they are the ones which are giving you way better returns, the broader markets that is, as opposed to what the Nifty companies have done. And there is that disconnect in the market, whether this is frenzy, this is fraud, what have you. But again, there is insatiable appetite. I mean, week after week, it's the broader markets which are outperforming the Nifty.
Well, I know that recently the regulator has warned about this exuberance.
Sure.
You might remember Alan Greenspan used that term in 1996, irrational exuberance, just before the dot-com really took off. So my opinion, and I don't mean to contradict anybody, including the regulator, is that it is the place to be. the small and mid caps, because they are the ultimate proxy for the capex recovery. That's where manufacturing is in India. You don't find it in the large caps. But I would say they're the prime beneficiaries of the robust economic growth that will happen over the next few years. And so their share prices are reflecting that for good reason.
So manufacturing is clearly one theme that is, coming back time and again. But what about public sector entities? Because for a large part, people didn't used to invest in it, or it was largely a trading bet which was done for a very transient period of time. Have things changed fundamentally that you would like to take a bigger bet on public sector entities or government-owned entities, as we call it?
Well, if there hadn't already been this big derating in the private banks, I might have said yes. But I think what's happening in India, it's been happening for a long time, it will continue, is there's just an organic transfer of wealth from the public to private sector, including in the banking system. And so deposits will continue to migrate to the private sector banks. And I would rather own the private banks longer term, because in India and any country in the world, you tend to have higher returns on equity and better valuations, or I should say, higher dividend payouts and that kind of thing in the private sector than the public sector.
You think the upcoming Indian elections are a big risk factor to the equity bull run, or do you think it's much in the price that it's going to be a continuity of the government, and what needs to be seen is the policies that they come up with in the next budget when they come to power?
So I know some people are concerned about this because the polls are suggesting, I think, around 360 seats in Lok Sabha for the BJP, and of course that would be a big increment over the last election. I have no insight into that.
Sure.
But my sense is that the election will go their way, and if it doesn't, then yes, there would probably be some derating in the market, because I think what a lot of people are looking forward to is land and labor reform, and the ability to do that would be compromised if they have to form a coalition government. My sense is that won't happen.
Mark, I'm also curious to know your take. You're very positive on India, so it's the case with a lot of investors as well. But why is that we are seeing FII outflows time and again? I mean, if you look at it on the YTD basis, last 12-month basis, FIIs are not coming back. The money from the globe is not coming into India with that kind of ferocity. What explains that? Is it just something related to the dollar hedging, etc., or why is the flow not coming into India, the foreign flows?
Well, I think this is something that really goes back 15 years now, that you've had essentially since around 2007 massive outperformance of the US over every other market in the world. I can't think of any exceptions. And that's because of the iPhone, basically. The iPhone was introduced in 2007, and with it, of course, came all the other smartphones, and the digitalization of the world economy has benefited the US technology sector first and foremost. If I just think to the old days when I would arrive in India, I'd get an old Ambassador cab and drive it into town, and I'd read the Times when I got to my hotel room, and now I get an Uber and I watch Netflix when I check in. And so this has been the reason why emerging markets have been sidelined. And I think as long as the technology sector in the US is doing well, unfortunately, they will continue to be sidelined, and I think technology in the US will do well because of artificial intelligence. It's the biggest beneficiary of this. We're on the cusp of a massive revolution in technology.
What happens to the Indian IT in that context? Because that's been the conundrum, right? Whether it will lead to perhaps more outsourcing happening to India, or will it lead to perhaps job cuts? Because the USP of Indian IT was cheap labor to an extent, right?
I don't know, but I do think that generally India's economy will be a massive beneficiary of artificial intelligence because of the highly mathematical nature of the population and educated and English speaking. So Stanford University did a study on artificial intelligence vibrancy, and India came after the US, and after about 20 countries that they studied, largely looking at people's LinkedIn accounts, but India was number 2. So the economy will benefit. I don't know about the big technology companies.
So what's going to be the next iPhone moment? What do you think it's going to be? Many debate that it's going to be back to basics, it's going to be manufacturing. But I don't know what's your take.
It will be just the adoption of artificial intelligence in the economy and society, absolutely profound implications. Sundar Pichai, the CEO of Google, says that it will probably have a larger impact on humanity than fire or electricity. But I can't say it's an iPhone moment. It's even bigger. It's like discovering fire. So we don't know. We'll only know in retrospect, because the big impacts are second and third derivatives of these kind of things, that the kind of thing you can only look back and understand. For example, when the internet was introduced, we were all wondering, what will the impact be? Well, I can say to you, one impact is that now in America, 2 out of 3 people are meeting their life partner online. They're no longer meeting their life partner through friends or family or at work, etc. They're sort of using their phone. And I'm not saying that's a good thing, but I'm just saying that for artificial intelligence, you'll have the same massive impact. But how to identify the actual changes, we can't do that now.
Okay, I think
Fascinating.
Exactly, fascinating indeed. But thanks so much for joining us with that riveting conversation. Thanks so much. But let's do one thing. Let's take a short break on the show. When we come back, we'll discuss the CD picks and try and take the last 30 minutes of the trading session as where they are headed. Welcome back. The Nifty is continuing to be around that 22,500 mark. Good amount of momentum in the broader markets as well as the Bank Nifty. But what's happening in the world of crude? That's clearly on the boil. We have seen that we are sitting at the highest level since the month of October. So a 5-6 month high coming in for crude. But what does it mean for India? What does it mean for consumers? And why is it that crude is boiling in the first place? Samit is joining us with all of that.
Well, if you see Brent crude prices up nearly 22% from the 2024 lows, they are now trading above the $91 per barrel mark, which is the highest that we have seen the last 5 months, that is from October 2023. So what has led to this surge in crude oil prices? Firstly, it was the Ukrainian drone attacks on the Russian refinery which triggered Russia to lower its production because of the damage that had happened to the refineries. Along with this, there's a heightened geopolitical tension in the Middle East, which has also led to a supply risk looming over this Middle East region. Now, Iran, which is the third largest producer in the OPEC, has vowed a revenge against Israel. Now, as per Iran, the former Israel has orchestrated an attack that killed the high-ranking Iranian military personnel. Now, any tension in the Middle East region leads to higher crude oil prices because the Middle East region contributes nearly 1/3 to the global crude oil production, and India also imports most of its crude requirement from the Middle East region. So this political tension in the Middle East region has led to this sudden surge in the crude oil prices. So how does this impact India now? Now, as India imports nearly 85% of its crude requirement, every increase in crude oil prices impacts the inflation. Now, general calculations suggest us that every $10 per barrel rise in the average prices of Indian crude oil basket inflates the current account deficit by nearly 14 to 15 billion US dollars. That is nearly 0.4% of the GDP, and it also increases the retail inflation by around 50 to 60 basis points and the wholesale inflation by around 125 to 135 basis points. Now, what would be the impact of this rising crude oil prices on Indian consumers like you and me? Now, because of the rising crude oil prices, generally the retail fuel, that is petrol and diesel, should also rise, given the fact that petrol and diesel market in India is deregulated, which means that with increase or decrease in crude oil prices, the prices of petrol and diesel should also change. But what is happening currently is in the more than 1 year, petrol and diesel prices have not been changing, and oil marketing companies have taken a cautious call to not increase or decrease petrol and diesel prices because there have been a lot of volatility in crude oil prices. But currently, if you see at $91 per barrel level, oil marketing companies are incurring a loss, and recently they had also reduced the petrol and diesel prices, thereby taking a hit on their financials. So it's it's not we can't conclusively say whether they will go ahead and increase the prices or not at the moment, but also remember the fact that election is upcoming, and in past election seasons we have always seen that there has not been any rise in the in retail fuel, that is petrol and diesel prices. So it remains to be seen whether oil marketing companies increase the retail fuel prices or not, because at this moment they are incurring losses, and if they increase which means that they need to increase the retail fuel, that is petrol and diesel prices. Now, what is the outlook when it comes to crude oil prices? Currently, as per experts, for the calendar year 2024, crude oil prices are expected to be in the range of around $90 to $95 per barrel, while for the next calendar year, that is 2025, crude oil prices are expected to ease down a bit, and experts expecting the prices to be anywhere between $75 to $80 per barrel level.
Okay, so Amit, we'll leave it at that. In fact, let's pick up on that conversation forward. Sudeep Bandyopadhyay joins in right now. Sudeep, hi, afternoon. What is it that you're making of the resilience of India equity markets? The fact that crude is already at 91, but the Indian markets aren't really sort of absorbing that hit so far. And even the central bank seems not too perturbed by, the sudden spike that one has seen.
Hi, Aisha. I think, you're absolutely right. Crude at 91 doesn't augur well for India. However, this has just happened and crude prices were lying for a very long time. And this sudden shooting up predominantly on the back of two things. One is, what's happening in Russia and the Gulf. And also the Chinese demand suddenly picking up with possible economic recovery in China. Now, this the combined effect of all these factors, and somewhere I'm sure the calculations are that geopolitical tensions will ease and production in Russia as well as Gulf will stabilize. But it is absolutely anybody's guess where things will go, because this is one commodity where I think every prediction is a guesswork, whether it's good guesswork or a bad guesswork. Beyond it is beyond everybody's control. So under the circumstances, I think we have to be careful. We have to be watching this space because, crude oil at 91 doesn't mean good for Indian equity market and in Indian economy.
Okay, point taken. So that's the word coming in on crude right now and how it's going to impact the Indian economy. But just taking a look at some of the other buzzers as well. Aavas Financiers has actually done quite well. It started off with a gain of around 3 to 4% at the first tick, but since then it's been gaining ground, and right now it's sitting at the highest point of the trading session, almost 10% gain coming in. DB Realty, Inox India, NCC, some of these infrastructure and real estate plays are also doing well. Linde India on the other hand has actually come off. It's down about 4%, and you also have Birla Soft, which is down about in the trading session. But let me actually go across to Kunal and get a sense as to what some of these frontline stocks are doing at this point of time, especially from the private banking space. A good amount of for ICICI Bank, Kotak, HDFC, they're all doing well today. And almost 400 points rally on Bank Nifty now.
HDFC Bank led the way in terms of confidence, because now I think the stock is on the verge of breaking about that 200 DMA, which I believe is a very good technical landmark to look out for HDFC Bank, especially after that January sell-off from 1700 levels for the stock. And that's adding confidence to the rest of the other pack from the private sector names. Now, out of the other two names which you mentioned, Kotak Bank is something which is very interesting, because I think just about a week out back, the stock had gone up to almost 1820, 1830 levels. From there, it had fallen to almost 1730 mark. And now it's come back towards, or it's coming back towards the breakout of that 1800 level. So this could be a very strong retest towards the previous swing high for Kotak Bank also. So now HDFC Bank moving up higher, hopefully breaking past about the 200 DMA. Kotak Bank now getting in line for a second round of a breakout, and ICICI Bank also getting into a recovery. So I think now the the private sector banks should improve, assumingly that these stocks sustain from where they have gained over the last 1 week towards breaking past about their previous swing highs.
Okay, that's the take coming in on ICICI Bank versus HDFC Bank right now. In fact, Sudeep, quite a few strong banking updates, right, coming in for the fourth quarter. Anything that stood by for you or stood out for you?
I think one underlying theme on the updates was very clear. Everybody is focused on deposit mobilization. I think that has become the driving factor, and I think some of the bank MDs, I was hearing the commentary as well, I think they're clearly focusing on mobilizing deposit at this stage. And, I think it's a good thing HDFC has done it, and pretty much RBL has done it, Yes Bank has done it, all other banks are focusing. It's important to mobilize deposits at a reasonable cost so the margin doesn't get impacted and the loan book also can grow seamlessly. So I think it's a good development which has happened. Banks are focused on deposit mobilization, and that's a good thing to have happened. Apart from that, asset quality by and large, other than I think one bank I heard, ISAF, Small Finance Bank, which had a challenge on the asset quality, rest of the bank's asset quality also has been either stable or has improved. So I would say BFSI, we probably are looking at a good set of numbers. They announce the financial results as well, sometimes later month or earlier next month.
So that's about banking stocks and the kind of updates that we've got. But let's take it across to my colleague Sharad as well. He's joining us to tell us what the dealing room chatter is like today. Sharad, what's on everyone's radar?
Well, yes, from the telecom space, the stock which should be in focus would be stars, and what we are gathering from dealers is this: the buying has picked up the marquee investor category as well as certain HNI counters. Now, of course, this buying has been relevant over the last 3 trading sessions where the volumes have also picked up. And importantly, if you look at the numbers, roughly 40 lakh have exchanged hands. That translates into 0.2% equity of the company itself. Now, if you look at the last 3 trading sessions, that is, the stock has gone up more than 6%. And importantly, the main trigger for the stock that the street is expecting is that getting the payments from Vodafone Idea fundraise would be a big boost to the company. Now, of course, Vodafone Idea has announced they would be coming with a large fundraise, and on April 6th, there's an important board meet happening from Vodafone Idea where the promoters are likely to use almost 2,075 crore rupees as well. Also, apart from the fund infusion, a positive key trigger for the stock would be their expansion plans, especially in the 5G space as well. So basically, Industars is in focus as marquee investors are set to be checking into the company.
Okay, that's the chatter on the dealing rooms. In the meantime, let's just take stock of what else is happening. ITC Marico, like we flagged off, they've definitely made a comeback. The index shows resilience amidst the global weakness that we've seen overnight, or for that matter, how Europe as well is panning out right now as I speak, because you're seeing very deep cuts actually across the European markets. You are anticipating fresh Eurozone economic data as well, but over a 1% cut across the board. In fact, the DAX is now down almost 300 points. FTSE is down almost 100 points there. CAC, about 1.5% downtick. Even the FTSE MIB is now heading for a 600-point decline, no less. So you're seeing quite a bit of weakness across the European markets. Hasn't quite rubbed off on our market for sure. Kotak holding up 2% as we speak right now. SBI Life as well is going very good. And then, of course, HDFC Bank, HDFC Life are all participating in today's market. But Sudeep, soon we'll have earnings as well trickling in. Prima facie, what's the anticipation? What are going to be the strongest sectors?
Well, the way I look at it, I think infra will come back with a strong set of numbers. So will defense. Apart from that, I'm looking at a good set of numbers from BFSI as well as real estate. I think these are 4 or 5 sectors which definitely will come back with good numbers. Updates, month-on-month updates have very clearly indicated that the business is robust and margins are also improving. As far as other sectors concerned, IT will be a mixed bag. I don't think we'll see major pickup in earnings in IT. Cement, again, will be a little subdued because the price increases which we thought will come hadn't come in last quarter, probably are now coming in. I think, FMCG, I think again, it'll be a mixed bag, but by and large, it will be a subdued kind of a quarter on account of slow and not picking up of rural demand.
Okay, that's the word coming in. But in terms of the market, there is a very strong momentum right now on the Bank Nifty. So, of course, it's up 424 points. But if you look at it from the lows of the day, it's almost up, 600-700 points. Quite a bit of recovery it's made, and large part of it has actually happened in the last 20 minutes or so. The monetary policy decisions were, of course, favorable in the sense that there were new announcements made regarding the LCR framework relooking, and the fact that the currency derivatives could have been something that would be looked at for small finance bank, but there was nothing that material to warrant perhaps that big a move on the banking index. But it has been a stark underperformer, so maybe a bit of catch up is what is happening in the banking index. We'll track that very closely, because I understand it's very close to the life highs as well, and we'll get those levels for you shortly. But in the meantime, let's take it across to Vinny, shift focus away from equities and macro, take a breather and try and understand what's been the report card per se of the Bollywood collection so far and what lies ahead. Vinny?
Absolutely, not only Bollywood but Hollywood also. So over we are seeing a blockbuster, at least Jan to March in terms of the collection that one has seen. There's bumper in terms of the collection when you look at it, 1,000 crores, and this is with just 5 successful films that we've seen. And let me take you all through some of them as well, right? What is doing well, what did well was Fighter, a super hit that came in there, and that is what made in terms of the collection. Around 250 crores just in India and 350 crores worldwide is what the collection came in for Fighter. Similarly, when you're looking at it for Shaitan, that is Ajay Devgan starrer movie, that also saw a super hit bumper collection of 145 crores in India, 201 crores that we saw over the world and over the globe as well. Teri Baaton, that managed to collect 84 crores from this release rate to currently that we're seeing 84 crores there, and worldwide 133 crores they managed to do. And other than that, Article 370, that was a hit movie that came in, and 81 crores over there with the 108 crores across the globe. Lastly, among the recent movies that have just released, we did have Crude that's already managed to collect 77 crores. And when you look at it, 81 crores is worldwide, but this is just released and it's still in the theatres. So yes, people can catch on these movies over the weekend as well. Hollywood, that's not behind as well, because we had a lot of releases that did well. That was Dune 2. We had Kung Fu Panda. We did have Godzilla, as well as all these movies managing to do well in terms of collections. So Hollywood seeing a blockbuster bumper Bollywood collections that we've seen this time as well. Well, some movies that actually missed in terms of the move that we used to see is Merry Christmas, Warrior, as well as Crack, which didn't manage to do as well as the other movies, and it was not that great in terms of the performance that we saw from these movies. Lastly, average businesses of the movies, when you see Missing Ladies has seen 16 crores, while Madgaon Express has also managed to see 23 crores. These are among the listings that we've seen. So surely something exciting and you can do with some of the movies are still in the theatre. You can go and catch some of these movies.
Okay, that's the take coming in on how the Bollywood box office has been. Anisha, which movie are you catching up next?
I don't think any of them. I don't think any of them interest me.
Which is the one that you just talked about? Teri
Teri Baaton Mein. I remember the song, but I don't think I'll watch it in any case. Fighter is something I've already watched. Shaitan, I've heard good things, but I don't know. Don't feel like going to the theatres anymore for these movies.
Well, Kunal, how's the PVR chart looking? Is it taking sentiment from Anisha's thought?
Nothing exciting on the charts. I think similar with respect to the movies. So I think nothing exciting for the charts also. The stock is still lying low below its key averages. 1375 is where it's trading right now. It's still almost like a 200 point lower than the 200 moving average, which means a divergence of almost 13-14% for the stock from its long-term average. So nothing in terms of volumes nor in indicators is really exciting for the charts.
Okay, point taken. So that's about the movies and the charts of PVR, both a bit lukewarm for now. But what's not lukewarm is clearly the Bank Nifty that's powering ahead. So let's take it across to Ansh to get a sense of the volume buzzers. And Ansh, do you have some from the banking and the financial pack, or is it the broad-based vibrancy in the market that you're picking up on?
Yes, our stock itself is Aavas Financials, and this is on the back of Q4 business update. As you can see in the chart, the stock has also given a breakout from its downward sloping resistance trend line, registering its biggest ever weekly gain. The stock has also surpassed about 200-day moving average, volume of over 6 times its average trading volume of last 10 sessions. Apart from this, Mahindra Life will also be in focus, as the stock has actually given a breakout from its horizontal resistance zone, touching record high level, along with volume of over 4 times its average trading volume of last 4 sessions. Lastly, SBI Cards will be in focus, as the stock has actually given a breakout from its double bottom chart pattern, surpassing upper 20 and 50 DMA, along with volume of over 60% its 20 session average volume. So keep an eye on the stocks.
That green bar. Naresh, what do you make of that?
So a very interesting chart. The stock has gone through this phase of correction and back to the same prices where it bottomed out previous 2 times. It almost broke below those levels in the current fall, but did not follow up action. So if you look at March 23 lows, it was closer to 690-700. March 22 lows were closer to 650 to 670. From those levels, we recently made a low around 700 back in February, and now we went below it, did not see a sharp action. Now it's back to the 730, 740 mark, which is the resistance, the recent swing highs on February. So it sustains about 740. We could call it a major bottom being done, and it could take a slow and steady recovery. So it's a buy at current levels. The stop losses would be a little deeper at 700.
That's The take on SBI Card. Just taking a leaf from that, Sudeep, what's your take on the entire insurance and this stock market related stocks as well, whether it's a CAM or a CDSL, etc., or insurance stocks like ICICI Lombard, they're coming back?
Well, I think, one thing we must understand what is a long-term trend. The long-term trend definitely is financialization of saving. And when that happens in the economy at a pace at which we have been seeing since COVID, all these financial infrastructure providers benefit, and that's what has happened. And the market also has given thumbs up, whether it's a CAMS or a CDSL or a BSE or an MCX or some of these broking companies, Angel, Motilal Oswal, listed broking companies, all of them have benefited handsomely. I think this trend is going to continue. I also must include the asset management companies and insurance companies in this space. Apart from general insurance, I think financialization of savings theory or theme runs across all this. As far as companies in the insurance space specifically, we have been bullish on the life insurance space for quite some time, and we maintain our view. But one must understand that this is not a quarter-on-quarter kind of a stock or an investment theme. This is a long-term investment theme. If you are understanding what is happening in the insurance space, I think it's a great buy. India is grossly underpenetrated as far as life insurance is concerned. It is much more underpenetrated even compared to some of the smaller Southeast Asian, poorer, smaller Southeast Asian countries. So insurance penetration is definitely going to increase, and that is definitely going to benefit all these organized private sector players definitely in a disproportionate manner. So we are bullish on SBI Life, we are bullish on HDFC Life and Max Life. I think these shares can be picked up for 1 year hold even at current levels. One also must remember that I think what is being talked about, the new government is going to bring an insurance bill, which is going to drastically improve the operational metrics and operational process for the insurance industry as a whole. So we'll wait for that, of course, but I think good times for insurance industry is definitely here.
Point taken. That's the word coming in as far as the insurance as well as the stock market ancillaries are concerned as well. But Sudeep, what's your view on the infrastructure sector? Take a look at NBCC today, up 10%. NCC is higher by 7%. You should also pull up an IRB infrastructure that's up 6.5%. Do you think these are just election-related moves, or there is a structural story at work here as well?
I think moves which happen today may be related to elections or something else, but one cannot deny the fact that there is a structural story behind it. Look at the kind of capital expenditure the government is doing behind infrastructure, construction, and railways. I think this is once in a lifetime one sees this kind of investment going into these sectors. And under the circumstances, definitely the infrastructure and construction related companies will benefit. So whether it's a cement, whether it's a EPC contractor, or whether it's a road contractor, I think they will definitely benefit. Now the question is, one has to pick up the stocks, and if somebody has to pick up stocks, I would again come back and recommend Larsen & Toubro definitely. There is absolutely no question. There should not be any question anybody's mind about Larsen. I think it's the best company in India as far as this infrastructure and construction is concerned. They have been doing all the right things and ticking the right boxes. Also, more than 33% of their order book is now coming from international market, predominantly Saudi Arabia, where they are a predominant infrastructure provider. And the margins are much higher in those businesses. So overall margin profile is changing, and Larsen can definitely be picked up. Amongst the other infrastructure plays, some of the names you mentioned can also be looked at, particularly NCC can be looked at.
Point taken. L&T and NCC, those are the big winners, and they have done well for the week as well. In fact, talking about the week gone by, yes, at T level, we have of course been in the green, but I think the biggest star of the week gone by was the cap index, over a 7% gain coming in, and I think that it's the largest weekly gain that we have seen in almost 3 years. Right, Aisha?
Oh yeah, absolutely. And to everyone's surprise, everyone's wondering with the weakness that there is in the global markets, what's actually holding up Indian markets. And it's clearly no rocket science, right? First, let's a glimpse of how India has performed week to date. And we're right on top there along with Shanghai. And you can see the other markets as to how they've done. Both the FTSE, the S&P 500 index, the Dow, or for that matter, the Nikkei have underperformed and quite significantly so. And mind you, Anisha, they continue to do so even as we speak right now. Now, why have Indian markets outperformed as opposed to our other global peers, barring China, of course, which is more a bottom-up valuation story playing out. Remember, the trading books have just about opened. Last week as well was a acutely truncated one, and you did make those adjustments on your loss-making holdings to try and lessen your capital gains taxes or gains rather, so which is why that is one, of course, trigger. More importantly, irrespective of the FII selling, look at the kind of DI buying just week to date alone that you've seen. We're already sitting at a 3,000 plus figure week to date so far, and today's number is still pending, by the way. The Q4 updates have been very, very strong. Our experts have been telling us as to how deposit mobilization, be it from HDFC Bank, be it from RBL, the smaller banking names, Yes Bank as well, have been very strong. Markets have reacted also very strongly to those Q4 updates coming in. And then, of course, you've not had very many large blocks as coming in. So no FII or FPI money gets also out because of that, in addition to the pressure that you're already seeing from the FI desks. Aside of that, look at the kind of FOMO that's playing out in the market. Just talking about as to how it's been a 7% move on the small cap index alone. The mid cap index as well has surged about almost 4%, and we already know the performance, which already made a lifetime high just this week. Also, I'm sad about what the technical setup is looking like. We're well above the support level. And, we're far away from that 22,200 print when it comes to the Nifty. And look at the kind of Nifty bank outperformance that you've seen, not just in terms of the support indicators, but names like HDFC Bank, which have come back with a vengeance, with almost a 40% contribution on the Nifty bank coming in alone in today's trading session. Not just that, the force multipliers, the large decadal themes, they continue to remain very, very intact for India. So be it the renewed capex cycle, be it the thriving credit growth that we've seen, the fact that our Indian banks are extremely well capitalized. So these are themes which really continue, and the kind of multiplier effect they have, that's not going to fizzle out in a week or 10 days. That's going to remain for many, many years to come. So that's what is making India shine.
A lot of things making India shine, and it's shining away right now with the fact that we are at the highest point of the trading session, 22,530 for the Nifty. I think the talking point remains to be the Bank Nifty and the solid surge that we have seen on the small cap index in the week gone by. Kunal, what's your take of 1% surge on Bank Nifty and even small cap? And I'm not talking about just today, but 7% move in a week. That's, of course, the biggest that we have seen in 3 years. Do you see this reversing in the coming week, or there are more chances that the uptrend will continue?
No, I think this should accelerate. Why reverse? Because, look at it this way. In the last 2 weeks, the US markets, the emerging markets, and, indices like Nikkei, they've already retraced by 1,000 points respectively. In that context, look at our market. We've gone through a complete revamp or a change from that 15th March sell-off point for the indices. Now the mid-cap, small caps made a comeback. You've seen sectors making a strong comeback. The risk on appetite making a strong comeback for many investors and traders, at least to a larger extent, if not in entirety. And now you're seeing the biggest laggard in terms of the sector, like the two big laggard sectors were the IT and banking stocks. Bank Nifty is now on the verge of a breakout of the lifetime high levels. These are strong technical factors when we look out for in terms of sector churn, and rarely do we see in such kind of a scenario that the indices get into an immediate reversal. But I think the probability is much higher that we can actually see more acceleration or a continuation for the index trends.
Wow, that's very good and heartening to know that next week is going to be truncated one, just a 4-day working week, thankfully. But it could be the week then we make fresh highs, not only on the Nifty, the mid-cap index and the small-cap index, which have been trading very close to the live highs already, but the Bank Nifty too, because that one was the one which was fairly quiet, fairly muted, but seems like it's finally gaining traction right now. And now I think less than 100 points is just about 100 points away from that all-time high level. That 470 point move. At the start of the week, it was again a bit tempered, maybe the MPC expectations, etc. But now it's broken out in style, and even the likes of Kotak Mahindra Bank, which absolutely did nothing for the longest period of time, have jumped up. HDFC Bank, of course, had good reason to do that because of the Q4 updates, and ICICI Bank Bank on potential expectation that the numbers are going to be strong given the peers have reported good numbers. This is also trending higher as we speak. So closing in on style. So let's quickly take actually we don't have the time to take the BTSC trade. So let's thank our guests for joining us today, Kunal, Nuresh as well as Sudeep for making time and speaking with us. Wrapping up the week and wrapping up on a high, 22,525 at the index level. Bank Nifty by almost 500 points. The advanced decline ratio is also quite impressive. 1,500 stocks advancing to almost 900 stocks declining. In terms of the big stock movers, it was SBI Card which was trending higher. We also saw Laurus Lab gain traction. A couple of these city gas distribution companies, IGL, MGL, were also in focus on account of news flow. Good traction continues on real estate stocks, whether it was the Godrej Properties, whether it was other names like, Godrej Properties, DLF, Mahindra Lifespace, etc. They were all doing well in the trading. We also saw a good amount of price volume action on Tata Chemicals today. Marico, of course, on that Q4 update wherein they talked about margin being better than expectation, and the fact that margin is expected to perhaps do better than the guided range is also something that augured well. So overall, we are closing in ship shape. In fact, the small cap index was higher by 7% in the week by. Biggest gains that we have seen in the last 3 years. The mid cap index has crossed the crucial mark of 50,000, and then banking index, that would be the one to watch out for in the coming week, whether it scales the all-time high or not. But with that, wrapping up the Closing Trades show. Thank you so much for being with us.
If you like this video, then like, share and subscribe to ET Now.